Well, I've been sitting here all day, I've been sitting in this waiting room, and I've been waiting on my friends, yes, I'm waiting on this conference call, all alone, and I'm on hold. Well, yes, I'm on hold. I hope it's not all day. Well, I wonder where they are, yes, I wonder where my friends have gone. Where'd they go? Tell me, where could they be while I'm waiting on this conference call? I don't know. Well, I'm holding on my phone, yes, I'm holding on the line. Hey! I don't know where they are, I don't know why I'm still alone. I'm on hold. Oh yes, I'm on hold. I hope it's not all day. Hey!
Well, let me tell y'all a story about a man who was on hold all day. Yes, he was. Now, maybe he had the time wrong, and maybe he didn't. There's just no way for me to say. And yes, I have seen some long hold times in my day. Yes, I have. And this was one of the worst. Now, this young man did not hang up the telephone, and you guess what happened? Yeah, that call began. That call started.
So stay on hold. You gotta stay on hold. Don't go away. Well, I've been sitting here all day, I've been sitting in this waiting room, and I've been waiting on my friends, yes, I'm waiting on this conference call, all alone, and I'm on hold. Well, yes, I'm on hold. I hope it's not all day. Well, I wonder where they are, yes, I wonder where my friends have gone. Where'd they go? Tell me, where could they be while I'm waiting on this conference call? I don't know. Well, I'm holding on my phone, yes, I'm holding on the line. Hey! I don't know where they are, I don't know why I'm still alone. I'm on hold. Oh yes, I'm on hold. I hope it's not all day. Hey!
Well, let me tell y'all a story about a man who was on hold all day. Yes, he was.
Hey, folks, and we're going to try a little different format today. So, okay, the first thing I want to do is let me know if you're one of the ones waiting out there for the Federal Reserve to cut rates next week, and so you can lock in your rate. Let me know, please. Just give me a thumbs up. Okay, so the bad news. The Federal Reserve doesn't control mortgage rates. But what we're going to talk about in today's video, if you're watching, you're trying to figure out, should you lock in? What should you do? If you're a home buyer, what rate's going to look like? If you're a home owner, we'll give you some tools that you can see. Maybe refinancing does make sense, or give you some tools, at least plug in the numbers to see if it, we can reach out to you. But I had a conversation with a builder, a realtor, and a mortgage person today, and I'm going to bring that up here in a second. But first off, I want to go over what we're looking at in regards to rates for today. Nothing really changing there. We did get that inflation number today, so we're going to go over some of those things. So the goal here is hopefully you're a homeowner or maybe a buyer. But what we're trying to do is educate more and more realtors and loan officers. So let me know, what you do. Please let me know over there. If you're a realtor, put an emoji of a home maybe. If you're a loan officer, put a dollar sign. If you're a consumer out there, just hang on and ask any questions that you guys have. That's the whole purpose of the show. So let's get over to it. The first thing I want to go over through here is, this is my website. So if you're a homeowner or something like that, go down, check out some of the tools we have for you. It's called the rateupdate.com. But here's what we want to go over with. Mortgage rates. Okay, so that's the most fundamental piece why you're here. We're called the rate update. Okay, and we update you on these rates every day. So first off, you have to know what rate you're looking at. And I know I'm beating this to a dead horse in the last couple of weeks, but you really have to understand what these are. If you're a homeowner or you're looking to buy, this is frustrating to you, and I get it. If you're a realtor, you're a loan officer, you have to be able to explain why there's different rates. Okay, so I'm going to go through that real quick with you, and then we're going to go through the economic news that's affecting these things, and then the actual what really affects these. And that's going to come up in about 2 minutes. So stay tuned for that. So here's what we're looking at. Mortgage News Daily. They have the 30-year fixed rate through here, and I just wanted to make this as blatant as I can. Is 6.24. Okay, what's that rate? Don't know. Freddie Mac has a rate today on the 30-year fix is 6.19. Bank rate 6.27. So let me rewind a second for a conversation I had. And this is for you realtors out there, and you loan officers, and even you consumers out there. The question I was asked first thing from one of the people in that conversation was, what's the rate? What's the rate? What's the rate? What kind of rate can you get? Because my other lenders, they can do this. And I'm like, I'm not soliciting you guys for your business. I was called to kind of explain some of these things to you. So here's the rate is relevant, but it kind of isn't relevant. There's so many pieces of the puzzle that go through these. So Mortgage News Daily, for example, to get that rate, you need a 780 credit score, and you got to put down 25%. What Freddie Mac's is completely different. I think it's 20% down. So what they're trying to give you is the most best possible rate there is. Mortgage News Daily, it's not a lender. What they do is they survey lenders all over the country. There might be hundreds of them, and they're coming back, and that's the average rate. And then Freddie Mac that's their rate on a specific component. And then bank rate, kind of the same thing as Mortgage News Daily. So these aren't really true rates. These are just averages out there. Now, the thing you have to understand is what's affecting rates. Okay, you can't say, okay, the Federal Reserve's coming in next week and they're going to cut rates, so I'm going to wait. Were you one of those ones that said, I know nobody voted over there, but were you waiting for the Federal Reserve to cut rates to lock in? Hopefully you're not a loan officer out there. Hopefully you get it by then. If you're a realtor, same thing. The goal is subscribe over there. Every day I come out and explain to you guys what's going on in the market. So here's what happened this week. Okay, so we had ADP payroll numbers coming in, and this is all relevant to basically the Federal Reserve is kind of just going on a whim right now. They're going to cut rates because the markets are expecting that. But here's the data they get. So what I always ask you to do is put yourself in their shoes. What would you be doing based on all this information? Now, not all the mumbo jumbo you hear on mainstream media. Let's just go through these numbers. So this week we had ADP. They're the largest private payroll company in the whole country. They came out and said, the job market looks dismal. There was a decrease of 32,000 people in November. Okay, so that didn't look good. And then we got over yesterday, we had initial jobless claims. Well, now here's what looks like on here. Now, a lot of people were saying, okay, the jobs market is really where it's at. Well, this is the cloudiness. Claims for unemployment benefits tumbled tumbled to 191, hitting the lowest levels since 2022. So that's initial jobless claims. So not that many people are getting let go. The problem is this: continued claims. The number of people continued to receive unemployment benefits decreased, but it's still over 1.9 million. But what this is telling us is there's really not a lot of firing, but there's really no hiring either. I think it's just as people get to retirement age or people move on in the jobs, a lot of companies just aren't replacing the jobs. Okay, so now let's look ahead. What's coming down the pike? Everything is going to be focused next week on what is the Federal Reserve going to do. Okay, so I'll tell you what they're going to do. Let's break this. They're going to cut. There's a 90% chance they're going to cut. But we saw over the last several cycles, I think going back to 2023, the Federal Reserve, they cut in September of 2023. Rates went from 6.2 to 7.2 in like 4 days. So just because they cut doesn't mean that really anything is going to happen to mortgage rates. What are affecting mortgage rates? Okay, so let's go down through here. I need you to understand this. And then we're going to go through the economic news and things that you could provide your clients. If you're a realtor, you're a loan officer, these are things that you could talk about with your clients because everybody's saying, I'm just going to wait for the Federal Reserve to cut. I also have some calculators coming out saying, okay, if you waited like till next year for rates to come down even more and you didn't refinance now, how much would you have lost in that meantime? And wonder if rates don't really go down in the future. You've just been sitting on the sidelines, just paying that extra interest. If you like the bank's record profits, just keep paying those. But let's get over to here. Here's what really affects mortgage rates. It's the bond market. Okay, the Federal Reserve has nothing to do with the bond market. Okay, so here's the bond market. I tried to do this through AI and it just kept coming up with these dollar signs. And so all these numbers are basically percentages. So put that in your mind. Okay, so mortgage rates are tied to bonds, especially the 10-year Treasury. Okay, it's not the Federal Reserve short-term rate. The difference between the 30-year mortgage rate and the 10-year Treasury is called the Treasury mortgage Treasury spread. Okay, so that's important. So a lot of people in the past, if you ask somebody that's been in the mortgage business for 20, 30 years, they're going to say, if you ask them what they follow for mortgage rates, the first thing they're going to say is the 10-year Treasury. You just add, 175 to that, and that's where the rates are. And let me go back to the conversation I had this morning. Okay, so this is what kind of came up in that conversation. But the realtor was adamant of what's the rate? And I'm like, I don't know because there's a lot of factors that go into the rate. But here's what I want to explain to you, what's going on with rates and things like that. And it just came down to this. And the banker even said this. And this was why I brought this up. There's a normal spread in rates. And he brought that up. He said, okay, the 10-year Treasuries right now is 4. So there's a 2% high end on the spread. So the max rate right now is 6. And I'm like, no, it doesn't work that way. We don't know. The risk, that premium, that extra is called a risk premium. We just spoke about right through here, mortgage Treasury spread. In the past, it's been 1.7 to 1.8. Okay, so again, we use those calculations. 10-year Treasury right now is 4. Let's just make it 4 for this simplistic reasons. You add the high end of 1.8 to that. That means mortgage rates should historically be right now 5.8. That's where I'm really coming in with my mortgage rates right now, because I don't really think tariffs are going to jack up inflation. I don't think we're going to have catastrophic unemployment. I might be the only one out there, and mainstream media is getting a lot of hits because they're trying to fear you. But this is why I'm coming up with these rates. So let's now go over. Now you understand this a little bit. So if we just take out the risk premium in the bond market, that means mortgage rates should be coming down. If the risk premium is normally 1.8 on the high end, we're at 2.2 right now. So that's about 40 basis points. That's almost 0.5% that could come out of mortgage rates just because of this risk premium. Now, the risk premium is built on several things, and that's what we're going to talk about. So that's where we come over to the economic calendar here for a second. So these are all the economic news events that really affect the bond market, and that's why we talk about it every day. Okay, so what we go through, like, here's next week's agenda. So we already had what came this week. We said the next most important news is coming out next week is from the Federal Reserve. But here's the stuff that they look at. Okay, and the reason why they look at these things is right through here, because they're really focused in on inflation. They monitor the PCE, and we're going to address that in a second because that number came out today. And they look at the unemployment numbers. So the unemployment, as long as it's under 5%, that's full employment. Well, this is the number that just came in today. It upticked one more tick on the PCE. That's the inflation number that the Fed watches. But I got some good news on this. And I've been saying, okay, I know you're seeing 2.8, and I've been saying 2.7, 2.8, and I'm saying this is going to go down because the housing inflation. So let's get over to that to give me so I can give you my thoughts on this. So all the economic news that's coming next week will somewhat maybe affect what the Federal Reserve is going to do, but we know they're going to cut rates. Okay, so let's get over to here. We want to look at what inflation is coming in, and also how tariffs are going to work on all this these things, because we will need to focus in on inflation and the jobs report. Okay, the jobs numbers are going to continue to come in, and they're cloudy, and we know that. But as everything is coming in this week, they're basically saying it's not falling off a cliff. No, there's not huge amount of hiring, but there's not a huge amount of firing. Okay, so now over to the inflation numbers. Okay, these keep upticking a little bit, and I said tariffs are going to be they're going to be inflationary, but the housing data plus energy plus tariffs are going to actually help as well. So let me get to what I'm talking about. Right now, the housing piece of the PCE, the inflation number that the Federal Reserve monitors, that equates out to 40% of it, it's actually going down right through here. The PCE was 3.7 in September, down from 3.9, where it was 8.3. So the government right now is still using a factor, I think I can find it in here, of I think it was 5 point something that they were looking at. So that's why as these inflationary numbers come down, you're going to see the inflation, or as the prices on these come, the rent equivalent prices come down, plus oil, plus the other things that are coming in, tariffs, which are bringing actually down our national debt. These are actually going to help the scenario. Okay, so there's not going to be a huge rally in the bond market, because there's no need to be right now. So you're going to see rates, I'm still saying 5.99 to 6.25 is where we're going to be at. We just need the risk premium to be taken out of this. So now let's get over to here. Here's what the Federal Reserve monitors. Here's what's going to happen next week. I want to get to your questions, because that's the whole point of this, but I want you to understand what's happening. So next week, the Federal Reserve is going to meet in 4 days. There is a 87% chance they're going to cut. That's been that way for 2-3 days now. So the Federal Reserve is going to cut. Okay, so we still know, because the Federal Reserve cut in the past, mortgage rates, they're basically have changed a 0.25% over the past year. Take where we were in January to where we are today, there's about a 0.25% adjustment between those, but you didn't realize that. Okay, so that's what's happening there. Today, here's what's happening in the bond market. It's kind of flat. But if you could see over time, as this bond goes up, this is what we focus in on to figure out what's going on with mortgage rates. We focus in on the mortgage bond. This tells us where rates are going. But it goes the opposite direction of this. So as this bond market goes up, rates come down. So I know I'm getting off topic a little bit. So let's get over to what we're really here for. Are you wanting to lock or float? So based on all this information that we just went through, what do you think? And please participate. What do you think is going to go on with the jobs market? You think it's going to be flat? Give me an equal sign. You think it's going to go way up? Give me a plus sign. If you think the jobs reports are going to come in bad, give me a negative sign. Okay, so that's what we want to see there. I'll give you my take, and we're going to go over if I'm looking to lock or float. Okay, so now let's get over to the inflation numbers. Remember, let's go back to April. Back in April, were we not told that inflation, it could spike all the way back to 7 or 8% where we were? Unfortunately, it hasn't. It's upticked, 0.3, 0.4. Okay, that's not a huge amount of money. Or percentages. I know up is bad, but we were expecting a huge spike. Okay, are a lot of the tariffs, are they all built in? No, maybe they're not all built in, but we haven't seen that huge adjustment up. That's the one piece. Then the other piece of the puzzle we have to focus in on is that housing number, the inflation report. I think the government is using a factor of 5. The number is actually 3.3. Okay, or 3.7, I think it was what it says. That's a big adjustment. You take those adjustments out of the inflation numbers, we're bringing the inflation right back down. And then you have energy prices. Oil was at $95 a barrel a year or two ago. It's at $59 a barrel right now, about 75% drop. So that's helping huge, and it's going to trickle in. So here's what my thing was. Were you one of the ones that panicked last week or the week before when everybody was selling stock and Bitcoin was $80 a coin or whatever you call it. I did a live event that day. Not a lot of people were there. And I was like, don't panic. I'm trying to say that right now. So here's what my thoughts are. If you're looking to buy in the next 30 days, I think we got 2 or 3 contracts in today, and this is really odd. So this time of year, it usually the purchase market really gets bad. If you're a realtor out there, or loan officer, give me a thumbs up if you agree on that one. But I'm still on the boat of locking. We know the Fed's going to come out next week and they're going to cut rates. That's built in. Today, the PCE number, I'll show you how it came in. It came in at 2.8. Okay, what analysts were expecting here. Let's go back to this week's agenda. Go back right through here and recast this so I can show you today's number. And it came in right at point. When I did this morning's video, I said if this thing comes on at point or just a little less, it was going to be a good day. That's the core PCE. We were talking about just the standard PCE. And the previous reading was 2.7. The estimates were 2.8. And I said, as long as it comes in at 2.8, we're fine. If it comes in at 2.7, we're even better. Because either one of those, the markets won't really react that much. So let's go over to see what the stock market's doing, because this is my only report on Fridays. So what I try to do at the end of each day, if you're new to the channel, subscribe over there. If you're a homeowner, maybe you're a home buyer and you hopefully haven't been bored to death by now. I know we talk a lot of information in regards to specific mortgage, how rates work and everything else like that. Some of my channels or videos are geared more to maybe loan officers. So I started an event each Thursday. So if you're a loan officer or realtor, join me on Thursdays. It's for you guys. I'm not your competition. It might seem like that. I am in the mortgage business. I'm actually a licensed mortgage loan officer in all 50 states as well as Puerto Rico. I have a slogan. It's one application, one credit pool. We can compare your loan to over 30 different lenders. So if you're a consumer, let's float over to my website here real quick so I can show you some tools that we have. So if you're a consumer, a lot of times people look at on their phones. Go to the RateWatch tool right through here. Okay, click it. What you're going to do is you're going to see a video right through here. It was a live event that we did a couple weeks that I went through, and I didn't even realize this was happening. I went through it, and I'm like, okay, let's just let's Google search the best rate for first-time home buyers. And it came up with this advertisement, and there was 5 or 6 or 7 realtor, their lenders on there. Then there was another section. Then there was another 20 or 30 lenders on there. I'm like, so who do you click? Okay, you're telling me to click here that being said, just go over to here. What you're going to do is put in your mortgage information. What rate would you want to refinance? When the rates hit there, I'll call you up. We'll go over the payments. We'll go over what the costs are going to be. We'll go over your break-even point. It makes sense. We'll lock in. If not, we'll lower the rate in the RateWatch tool. But there's other things that we could help you with. So let's go down the realm of you're looking to buy at the beginning of next year, or you're looking to build and it's going to be available at the end of the year. What do you do? Okay, the first thing I would do, go out there and make sure your credit is in check. Get your credit. We have all kinds of systems down below. I am as cheap as you can possibly be. So almost everything down there, I tried my best to give it to you free. Just links to things out there, things like that. I even created a website called creditscoresandmore.com. Here, let me pull it up. You can actually go here, and if you haven't signed up for, Credit Karma and those things, there's some, I give you links to these systems right through here. So I created this years ago just to help people understand credit. So go down through here and it's free credit scores. I don't know which one this is going to be this week, but it's Credit Karma. So we just flop it around. Just sign up for these things. They're free. They're not going to intrude on your privacy. Don't pay for any of this stuff. Use all the systems that are free out there. We do have some systems that you can really use to help you out, figuring out what your real credit scores are. So first off, make sure, let's go over to these things. Make sure you're on the right path when it comes to the, that's getting on my nerves a little bit. Your credit scores. Sorry about that, the blank there. So we want to make sure your credit scores are right. They might be completely what you think they are, or they might be completely what you don't think they are. So every day we get, I don't know how many, 10, 15 applications, and you're always asking the person, what's your credit score? They'll whip it out, and then all of a sudden we pull the credit, it's like 80 points less, and we're like, where'd you get your credit score? Oh, it's that thing that I get on my, it's like, that's not a real credit score. So these are things so first off, do that. Next thing is make sure you budget. Okay, a lot of times when you're trying to figure out what the total payments are going to be, you forget maybe about the PMI. You didn't put down 20%. Well, there's a cost for that. Okay. So what's the interest rate? Okay. That's the first question everybody asks. You might not get what's on the screen. Like, for example, up here, Mortgage News Daily, to get that rate, you have to have a 780 credit score and put down 25%. Well, if you don't do that, what's your rate going to be? So you have to figure that out. What's the real estate taxes? Is it a brand new build? You need to make sure what those taxes are going to be. A lot of people at D.R. Horton, they got hammered because their real estate taxes just took a huge jump because the escrow, the taxes they were paying in their mortgage payment was based on the raw land, not the property. So if you're confused on all this, that's where you need some help. So reach out to us. We can go through your budget. We can make sure you understand your credit and the credit scores. If you have some time too, maybe you can fix your credit, up your credit scores a little bit. Okay. And then we're going to go through all the programs that you fit into and why. Then you pick it, which one you want to go with. We'll give you our suggestions and the whys behind it. Here's the cool thing. We have a slogan. It's one application, one credit pool. We can compare your loan over 30 different lenders. How do we do that? That's what the biggest question I get most of the time. Well, folks, I've been a mortgage person for 35 years. I've been in the broker side of this probably 20 of those years. So when I came to the bank that I'm at right now, it provides me a license in all 50 states as well as Puerto Rico. The cool thing is we're also a huge broker. We're set up with over 30 different lenders. And the reason why is when you call in, we want to make sure the quote that we're offering you back, it can't be beat, or somebody really dug deep on their rates to match these things, because we're helping you get rates from over 30 other lenders. We can facilitate the whole thing. So we act just as a broker in most of these cases. So that's what we do. So we want to inform people on, putting them right down the right path. What rate do you qualify for? What is your total payment? Because we don't want you shocked and awed, come spring when you go to finally buy a house, you're like, man, that payment's $500 more than I thought. I can't buy that amount of home. Make sure you're right on the right path. So that's what we offer here with our services. So if you have any questions, who do we got in here today? Please, folks, ask some questions. That's what we're here for. Will the 30-year come down to 5.5? If not, should I lock in at 5.99? You know what? Here's probably the biggest. That's one of the biggest questions I get. So we have a calculator coming out. And I'm getting asked for this every day. My son is actually on the train out to visit me right now. Actually, I got to leave in about an hour to pick him up. He's actually, just for you guys' information, I'm actually going to the Big Ten Championship this weekend. Ohio State versus Indiana. Actually, my son he played for JMU. He was on the championship team there, and he's the one who actually works for us here. And the coach there, Sigarelli, or whatever his name is he moved over to Indiana and took most of the team with him. And so we're going to that game over the weekend. So good luck to Indiana, Ohio State. I'm going to root for both. I'm just want a good game and nobody to get hurt. So where was I going on this direction? So we went over rates. I'm going to go over the locks on how we do this stuff. So I apologize if you guys have any questions. We're going over that rate. Will the 30-year come down? Lock in at 5.99. Okay, we're coming up with that calculator. That's what I was talking about. And to show you, if you're waiting now, I'd love to know if you're refinancing now, what's your current rate? Okay, so this is where a lot of this data comes in. So let's go back to this. Okay, so now I'm going to talk to the consumers out there. All right. So every month that you're waiting and you're paying that 7% interest rate or whatever, you're burning interest. Okay. So check out how much refinancing would cost. That's the number one thing. And when people are saying it doesn't cost anything, it's all rolled in. Bullshit. It ain't. You're getting costs. You want to know, let me know all my fees. Okay. That's the biggest piece of the puzzle that a lot of people they get duped on. Okay, so jump in, go to our RateWatch tool, and fill in the data. We even have, does it make sense to refinance? Here's a tool here you can use, resources or calculators. Go into calculators, used in videos, and this one right through here. Should I refinance? Really cool tool. And this is what I do in most videos that we do. So when people sign up for the RateWatch tool, I go through here. There's a new calculator we're coming out with, and we can calculate these things. But in most cases, when you bought the house, your closing costs were crazy. But now you're looking to refinance and you're like, why should I pay $5,000, $6,000, $7,000, $8,000 like I did when I bought the house? Why should I pay that to refinance? Doesn't make any sense. Well, the good news is you probably won't have to pay those fees, a fraction of those fees. Example, in Illinois, and I'll try to put it down below, the tax or title fee estimator down below. It's if I bought my house, the current house I live in right now, if I bought it here in Illinois, I would have about 8 to 9,000 in taxes. They keep changing the tax rates on us. So about 8 or 9,000. Refinances, 1,099. That's the fee. Okay, so that's where a lot of people are like, okay, maybe some states it might even be less. I've seen some $400. Okay, so check it out. Even a little adjustment in your rate might really be in your favor. So we have a calculator coming out saying, okay, while you're waiting, you're losing this interest and you're paying the bank, and the bank's making a lot of profits on those. So why wait? So check out the RateWatch tool. You're going to put in all your information. We'll send you a video back. No hard sales. It's basically me going through, hey, saying, hey, here's all your numbers. Here's your savings. Here's your break-even points. And if you want to go further, fill out some information. We'll send you a specific exactly what you would be getting. So let's go back and do a recap for those out there. I'm going to talk to realtors, mortgage loan officers, and even the consumer now. So rates, make sure you understand when you're looking at rates. That's where we can come into play. We can shop yours with over 30 different lenders. That's number one. Pay attention to the economic news next week, but the Federal Reserve will be cutting rates. Avoid all the smoke screens and all the BS people are telling you in regards to the housing market's going to crash, mortgage rates are going to spike, the unemployment rate's going to go crazy, tariffs are going to, it's all a bunch of smoke and mirrors, folks. Calm down. Calm down. It's going to be okay. Next year, here's what my expectations are. They might be null and dull. They might be dull, but I'm going to put a video out over the next 2 weeks that's going to really drill down where my expectations are in mortgage rates. And then we're going to dive into another video on real estate values. I hate that video because I get into debates with everybody every day on this. But here's my thoughts. Next year, the Federal Reserve is going to be packed with Trump officials. Okay, so that's coming. That'll all be done by May. So we're going to have 2 Fed meetings prior to that. I don't think tariffs, again, what's going to happen with the tariff ruling on the Supreme Court, write these down and let's fact check this in a month. The Supreme Court's probably going to rule a lot of those tariffs illegal. So the Trump administration, I'm sure in the background already has all the data figured out to maneuver all this stuff, because they don't seem to be concerned at all about that. The other piece of the puzzle is how inflationary are things going to be? Well, with oil and then the tariffs mostly in place, and then the tariffs revenue coming in, and the unemployment rate not spiking, because basically people are just sitting there right now figuring out, what do? We don't know what's going to go on with healthcare. We don't really know what's going on with taxes. We don't know if the government's going to fund this. Once everybody has an idea of, okay, things aren't so bad, then the markets will just stabilize. So you're going to see house prices maybe up 1-2%, nothing crazy, no crashing. Some areas are going to be bad. Okay, mortgage rates, that's what you're here for. I'm going to say, let's just assume that all the markets just stabilize and we get a little bit comfort. Okay, just take the risk premium that we looked at in the previous numbers. We're going to look at those right through here that confused the heck out of you guys. So what we're going to do is we're going to say we're going to go back to historic numbers on the mortgage premium spread of 1.8. I'm saying that the Treasury yield's going to hit 4 and just stick there. I'm going to say the risk premium comes out in Q2 of next year back to 1.8. So I'm saying we're going to be about 5.875 next year, right around that range. So I'll change probably Q2 of next year to 5.75 to 6.25. And I know there's a spread there, but anything can really upset the markets. It's a tight enough range to give you at least an idea on how this would affect your home down the road or in your purchasing power. It also gives you idea, should you refinance now? Okay, so that's that. The economic calendar next week, it's all going to be about the Federal Reserve. And again, what a lot of people don't talk about it, they always give you that bad news. But the good news is we have shelter inflation plummeting. It was 8% 2 years ago. It's 3.7% now, 5% down. Okay, so we had inflation at 7 and it's at 3 now. Okay, so we still need to go down a little bit more, and I get that, and these numbers are going to help push that. Federal Reserve, they monitor these things, but they are going to cut. What are they going to do in the future? Here's a thing that's most likely coming out in January. I think that's the January mapping. They come out 3 or 4 times a year. This is for our loan officers out there, and even if you're a consumer and you want to get this, the Federal Reserve comes out each year, 4 times a year, and the Fed officials that have the right to vote, they put a dot on where they expect the federal funds rate to be. Where they're most likely going to vote on where the federal funds rate is going to be. And that's the rate that the Federal Reserve controls. So here was this year's. Okay, it's 3.5 to 3.75. That's right through there. And that's saying by the end of 2025, that's where we're going to be. And that's where we're going to be. That's what everybody, the consensus is telling us. Okay, so now we got to go over to 2026. There's no consensus here. So the cool thing is in January, we should be getting a new dot plot. And these will probably have some new Fed officials in there. If they don't, at least it'll give us a conservative view. So this dot plot's going to be huge that comes out in January. But again, I don't think anything's going to really happen in December. So January, that dot plot's going to play a huge role. Mark my words, going to play a huge role in all this. Please feel free to fact check me, go back in my previous videos. I don't change my opinions only when the data changes, folks, because it's all data driven. So the next thing is the markets today, like I told you, as long as the PCE came in at point or at 2.8 or 2.7, markets weren't really going to do anything. See what the stock market's doing for today, up 164, up 74, basically across the board. It's okay. A good day. VIX is down in the 15. What this is, if you're new to the channel, we focus in on the VIX sometimes. This gives us the anxiety levels on Wall Street. So this is, when you see the markets up 500, 600, 700 points a day and whatever, the VIX spikes because there's something really making the markets nervous. So the markets are pretty much flat right now. Oil, there's that oil I said we needed $60 or below for the inflation. It's right there just for kicks. Let's see what crypto's doing, and it's getting hammered once again. So we'll look at that for the day. So that's my thoughts. If you guys have anything else you want me to talk about or discuss, or at least give my 2 cents on, I'd love to know. I know a lot on Fridays afternoon, there's not a lot of people that have their afternoons open. So if you want to leave some comments down below, please do. It's tough to really get to those. So there is a link down below that says Ask Dan. Feel free to click that. It'll send me a message, and I'll message you back. I can text you, email you, call you, whatever you want to do. So reach out to me, send me an email if you really want to be in touch. But if you really want some assistance, please go to our website, which is therateupdate.com, and you can find all the tools and everything else you need right there to help assist you into maybe looking to refinance or maybe looking to see if purchasing is in the cards for you next year. So that's it for today, folks. I'm off to the train to pick up my son. You have a fantastic weekend. I'll be at the Big Ten Championship. I will be posting a lot of shorts out there. So check out, I actually created a secondary channel. Don't know if you guys saw it, where all the shorts go. There's a ton of shorts. So check that out. And other than that, God bless. Be safe. Have a great weekend. And folks, I'll be back here Monday morning to let you know how all the markets are affected and the whys behind it. Thanks for joining me today.